what we're talking about today are these backyard apartments that we're doing here in San Diego. And our company, our company is called The Next Wave, and it's both an allusion, it's both an homage to like the next wave, like the surfing, which is really popular here in San Diego, of course, and also the next wave in the San Diego housing, which is doing these backyard apartments.
Yeah. And of course, there's always a disclaimer here, lots of words, but basically, Andrew and I, we are not lawyers. We are not CPAs. And of course, we're not making any predictions. Past performance is not indicative of future returns, all of that good stuff. So please, we provide a lot of information. At the end, we'll show that where we have our legal documents and everything else, but always consult with a professional. So again, we are not the professionals, but we like to do what we do, and please make sure any questions or concerns you certainly look to the professional to give you those answers.
Yeah, we are registered 506 fund, so we actually there's lots of things we cannot make claims on because we are a registered fund, which does make us more legit, but definitely handcuffs us on things that we can say, which makes a lot of sense. And all those rules are great ones to follow. So we're going to discuss today are the 4 jobs in an investment portfolio, why alternative investments are a good thing to add to your portfolio, why we love backyard apartments, why they're just absolutely fantastic things that we're pushing on, and why we're so excited about them. And of course, we can talk about all the great, amazing things that are going to happen from these things, but the big thing is we also want to talk about mitigating risks and how we can reduce those things, and then some of the deals we have in our pipeline, which are pretty exciting.
Yeah, and so I'll start off a little bit about myself. Graduated from the Naval Academy probably too many years ago. I've had multiple careers, starting off obviously in the military. I was an officer in the Marine Corps. After I got out, I went to graduate school both in Mexico, university in Monterrey, Mexico, as well as in San Diego at the University of San Diego. And once I finished that program, I started working at Qualcomm and did multiple overseas stints, both in South America and Brazil, where I met my wife. It was a good bonus. And also in the UK. And so I've had, like I said, several careers. And then after leaving Qualcomm, I decided to start a career in real estate. So I've got my contractor's license. Also, I've had my real estate license and have been doing development work, real estate investing for quite a few years now. And so all of that has led me to initially to founding the Next Wave Group and the concept of that, and to the ADU opportunity. And then, of course, met with Andrew, and he and I have teamed up. So I'll let him introduce himself.
Yeah, so I'm Andrew Erickson. I'm just a serial entrepreneur. I have an engineering degree, and I came down here to San Diego for Qualcomm, the big tech company down here. And I built up a few different businesses, and I've exited some of those for 7-figure results. So I've built things from scratch and sold them as a proper big exit. And of course, I love real estate, so I've put a lot of that stuff that I've made in the e-commerce space. And we have some people joining, more people joining. All right, Mason's joining. Have that stuff that I have, the businesses I built, and I put a lot of that into real estate. And one thing that got me really excited is learning about these ADU stuff. And so I've built out these. I'm a big spreadsheet nerd, so I built out these different automated tools to analyze all these deals. And of course, I'm coming in with a lot of capital too to add to these projects.
Awesome. So as you said, we now specialize in basically turning single family. Sometimes there's an exception. There might be duplexes or fourplexes or whatever, but small properties into multi-unit properties by actually adding accessory dwelling units, and we'll talk a little bit more how we do that, but adding those into the backyard. And so basically what that allows us to do is to turn small properties into commercial properties. And so as Andrew had mentioned, he has developed a proprietary underwriting system, which is really, really cool. We're able to, wherever the property comes in from, we're able to assess it do a very quick underwriting, and then understand exactly what the opportunity is, really before probably just about anybody else. And so we're able to scale a lot of vertical. Word is used a lot, but we have a lot of vertical integration in our process. So we try to be as efficient and as quick as we can into the marketplace.
Yeah, and our vision is to get to 100 units by the end of 2025. So far we have 24 that we're working on right now, and we want to get up to 100. And so to do that, we need to acquire 8 to 10 more properties this year, and to do that, we need to raise $6 to $8 million to bring that to fruition. So that's kind of the big driving force. That's the big annual goal. It's January, so that's the goal. That's the goal we set a few months ago, and we're mostly on track for us. It's pretty exciting.
Yeah, and one thing that's exciting is that we're getting ready to close one escrow, but we'd raised the funds right at the end of the year. So we just finished that first raise. Really cool.
Yep. Oh, the jobs of investment portfolio. So really, there's three things you should think about when you're thinking about investing, and that is protecting against inflation, long-term growth, of course, and then reducing risk by diversifying. And so one thing that's kind of interesting as we look at, I know a lot of people already on this call are already very convinced that real estate's the way to go. So I don't need to belabor it too much, but I just want to show that real estate, of course, is a huge component of many people's portfolios, and particularly this study we found, which was really interesting, is that the Tiger 21, which is like a mastermind for rich people, basically, they talked about how all the ultra wealthy people, how their portfolios are broken down. You can see here that real estate is a huge chunk, as well as private equity and stocks. So stocks actually is a minority of stuff, and this seems to give you kind of the best return.
And so again, as Andrew said, we love real estate. He and I both, we individually own real estate investments, and really the big thing here is for cash flow appreciation, and there's tons of, for those in the U.S., there's tons of tax benefits as well. So while a property is appreciated, you also have the depreciation, which especially for people who are business owners and whatnot, they get to write off against the passive losses against other income. So tremendous benefits from owning real estate. And passively, so again, Andrew and I, we've owned them ourselves, and lots of people think about, and we even have one investor who has invested with us and was coming to invest with us more, because the more they had thought about actually owning the real estate themselves and trying to do the kinds of things that we do, said it's probably really not worth it. As we like to call it in the business, tenants, toilets, and trash. And I even one time, very sadly, had some squatters break into property I had, and somebody passed away inside the property. So while there's a lot of sort of glamour or people thinking, wow, I can do that. I can own my own real estate. You watch HGTV and all the fun stuff that happens there. The reality can be quite a bit more challenging. So instead, leave it to the experts and basically offload some of those challenges to people like ourselves. And so our investment strategy is basically taking the laws that were initially created by the state of California, which were, and many people are familiar with ADUs. Sometimes they call them backyard apartments, or excuse me, I'm reading the granny flats. And so what we said is, well, we'll take that and we actually will build multiples of ADUs in a backyard. And the laws and regs here in San Diego allow us to do that. So what you see on the one side of the slide there with the 6-pack unit, that's actually 2 ADUs are set in one on top of the other as a duplex, next to another two, next to another two, and they're all separated by a firewall. So what that allows us to do is, maybe you would think of a granny flat or an accessory dwelling as being like one 500 square foot property in a backyard. We have 6, and each one of those 2-packs is actually considered residential construction. So we're able to design as well as build them, design, permit them, and build them much more quickly than you would do if it was like a full, what's called a CBC, the Commercial Building Code construction. So that's one of the things that allows us to be quicker, but also much more cost efficient.
Yeah, and Marcelo, this really is a technique that I think Marcelo is really pioneering or is popularizing, because this is I talked to a lot of developers and a lot of large agencies that do ADUs, and they were not very did not really understand this process. And this is I know we just touched on it very quickly, but there's just some of the stuff that Marcelo's done that's just absolutely amazing. That really drastically reduces costs and timelines. And so that's just want to gush on you a little bit there,
Thank you,
Marcelo, this
Andrew. Thank you.
technique. All right.
Yeah, it's a cool process. And again, the city of San Diego is very much emphasizing affordable housing. We've had a crisis here for literally decades. And so this is something now they not only, it's not just that they're allowing it, but they're actually actively incentivizing it.
Yep. And here's an example. This is kind of fun. Here's the drawing, right? Just a little silly box on a picture, but here's the actual physical product. This video, this is a quick video. I'm just gonna play. There we go.
Yeah, and this video is actually already pretty out of date. We started this project the 1st of September, and basically now we're getting ready to put the color coat on the exterior, and the interior is almost fully completed.
Yeah, so you can see there's that backyard apartment.
Yeah, come to life.
And it's crazy. It actually takes less time to build these things from the ground up than it does to get the permission to do it. So these things are going up quick. So why are these a better investment, or why is this business plan awesome? The big thing here, of course, is good returns. So we're expecting a 20% return, at least 20% return. And we're saying at least because we think they're actually much higher than that. We'll go over some of the projects in our pipeline and our expected returns on them. But we're saying 20% just so that we underpromise so that we can over-deliver later. But the returns are very strong. Also, short timelines. We're talking 10, 12, 18 months for most of these things. Depending on whether you buy them with or without a permit, there's a few different caveats, but less than 2 years, 1 to 2 years basically. And of course, high demand. I mean, these are affordable housings. These brand new construction stuff in a city that has not had a lot of construction, particularly in like the actual city of San Diego. A lot of the stock is really old. And we're going into great neighborhoods where there's a lot of demand. And on top of that, also we have an arbitrage. Arbitrage is like one of my favorite words in business, because arbitrage means there's a market inefficiency. Okay, if there's an arbitrage opportunity, that means that there's an opportunity, right? And the big thing here is we're buying single family homes, and then just a single family or a duplex home using a single family home financing, and then turning them into commercial properties. And then we're buying them on a comp basis as a single family home, and then selling them on an NOI based model, which Karen, I'm sure you know more about that than I do, but that's the arbitrage thing. Also the speed, we're going quick. 18 months. We have a process. We've done this several times. Marcelo's done it, 10, 15 times. And we've already accomplished a few of these things. And so we can go quick. And of course, political support. The mayor was just reelected on the basis, on the campaign of building more housing. And so he kind of has a mandate from the last election that we're good to go on this stuff. We don't know if we're still going to have this opportunity 2, 4, 6 years from now, but right now we have the support.
Yeah, and the speed of execution just emphasizes a normal project is 3, 4, 5 years, larger construction. So
yep.
Big difference.
And so what we do is we acquire the properties, we renovate them, and then we also rent them after renovation while we're waiting for the permit. We get the permit, we build them, we lease them, and we sell them. The reason why you lease them first is that you can take those leases and you can get financing from those signed leases. And this is really one of the key parts that really drives a lot of that return for us. Marcelo, can you talk about the
Yeah.
experience?
Okay. Yeah, kind of funny here. So I was one of the very first builders of an ADU before they were cool. Actually, they used to call them companion units. And the city of San Diego and actually all of California was so restrictive that this particular, and of course the prices are going to look really funny because this was from quite a few years ago now, 2017. But we built this companion unit and there were so many restrictions as to I couldn't put an actual stove in it. I had to record an instrument that said I actually wouldn't rent it out. So it was really kind of crazy. And I did the one, I kind of got a little bad taste in my mouth from all the restrictions from the city. We made a good profit on the sale of it because obviously for the buyer, this was a great, like a mother-in-law unit or whatever, but it didn't really fulfill sort of what I was hoping for at the time. So in the meantime, what happened with first the state of California brought in these much more uh, much more aggressive, I would say, the ADU laws, which actually keep any city from enforcing specifically these kinds of restrictions that you see. And then the city of San Diego did a complete 180-degree turn and said, we're going to take that and we're going to allow you to do practically anything with these ADUs within our zoning, let's call it the zoning box. So anyway, so then the next one, if you can go on, Andrew. So then the next one we built here, you can see this is a large building. There's 3 ADUs on this one, but each one of them is over 1,000 square feet. So definitely not a granny flat, right? So this one is one I did with a different partnership. We're leasing it out and we're going to keep it for a while before we sell it. Next one, Andrew. And then different projects in various phases of progression, anywhere from having raised all the funds and being in permitting to actually getting near to actual completion. So now it's been pretty exciting. It's taken a while. When you are one of the first people that's doing something, people always want to say, well, what have you done? Where is it? What's completed? So we're almost there. And so it's really exciting, just like the one on Bancroft, the one we showed you the video. That one we're really excited about because that's the first one in our fund, and it's also one of the first ones that's going to come out of the pipeline.
And of course, a lot of this information that we're putting here, we're going quickly just for the sake of time, but you guys will all get the slide deck to this. We'll email it out. So if you want to, look up the addresses or drive by them, or if you want to go visit, we're happy to take you through some of the properties as well. So our deal criteria, again, this I won't get too technical on this, but we have lots of different ways we look at the properties and what is in our buy box. Really, we're looking for the single family home with that big backyard that is zoned, hopefully multifamily, but zone residential, but allows us to build a lot of ADUs. We're looking in nice neighborhoods, gentrifying neighborhoods. Close to the beach is great. We can't be. These are not low tier neighborhoods because the rents have to be there for this to make sense. And it has to be in the city limits of San Diego, and really we need neighborhoods where we can charge $2,000 a month for a brand new constructed 1-bedroom apartment. Our underwriting process. So again, I'm not going to read every single thing here, but we have an automated property search. So I have a coding background, so I built a tool that scrapes all of Redfin, and anytime a listing comes on that meets this criteria here, that's in that kind of that buy box and certain zip codes, and has a certain zoning, the automated script I wrote grabs all the information, goes to a couple different websites, grabs that stuff, and does a quick underwriting and does kind of a best case scenario, likely scenario, and a worst case scenario, and then it kind of sets creates this entire system where we can analyze hundreds of bills, and that's worked out really well to really find the great opportunities. And of course, automation is great, but we have to have humans also look at the stuff too. So we have a team member who reviews all the information and verifies what the with the script, shows us, and then from there, once that is looking good, it then goes to me and Marcelo, and we go through and do a full analysis and double check everything. And we talk to some of our friends in the community to kind of figure out, is this a good spot? Is this, actually triple checking all that stuff. And we also have professional consultants, architects who really just specialize in ADUs, and also land use lawyers who can help us. And we actually know some people in the city now too that we can talk to, some of the heads of the ADU permitting teams inside the city, and then we make an offer. That's our process.
Yeah, and so and risks, obviously, as Andrew said, we won't read through every one of these, but market fluctuations are one, and interest rates. Of course, we've been in this higher interest rate environment, and it could be that we'll be there for a little while longer. It potentially seems like. So we have to make sure we're prepared for that. Project timelines, as Andrew said, it seems like it takes longer to permit than to build nowadays. I feel pretty confident in the ability to get these built quickly, but yeah, there's bureaucracy to deal with. Potentially, cost overruns can happen, and I'm a contractor, and we all know the reputation of contractors. so we try to improve the reputation of contractors in the marketplace, and not have cost overruns or keep them to the minimum. And of course, regulatory hurdles are always there as well. We feel like we have that covered as well, but we work with professionals throughout the market here to make sure we are covered for that. So we're always going through analysis of all of the local properties, and it's actually super important to not just the overall market, but sub-markets and even sub-markets. Sometimes when you cross a street or across a freeway or something, valuations can change dramatically. So that's something we're very, very cognizant of. Conservative projections and cap rates. We don't bet on cap rates compressing, even though that does seem that is what's happening now. But we don't put any kind of optimistic projections on what we think will happen in the future. We go with what's today, what our rents are today, what cap rates are today, not how rents could possibly go up or how cap rates could compress. And as Andrew said, we do consult professionals for broker price opinions, for appraisal opinions. Again, I'd say we don't, we do believe property in Southern California is going to continue to appreciate. There are some very big players that are coming into the market, like Blackstone and stuff, who have just made some large purchases here. So they see something as well. But again, we're not putting that into our calculations. And when we plan out the building process, we want to get to the end. We want to raise enough capital so that when we're done with the project, with our conservative assumptions, we're at a 50%, at least a 50% equity position.
Yeah, yep. And I think that appreciation thing, really, the whole play here is the forced appreciation of the build, not the appreciation of the market, right? And I am bullish on San Diego. I think we will have something similar to this kind of growth. Mm-hmm. But I think that's a big one for me.
Yeah, and we basically go in with about a third equity position, planning to come out with, again, 50% plus. Our designs are, as Andrew said, it's affordable. So we keep it fairly simple and elegant. We use what's called type VA construction, which is standard wood framing, usually stucco, 1 hour fire rated walls. So they do have fire rating, but it's all within very standard guidelines. Again, we make sure that our cost estimates have a buffer in them, so that you always run into unexpected things, but again, all of it is within the guidelines of that 50% at the back end. We've have teams that we're working with, they've been working with for years and years and years. And so we've developed relationships and feel really good now about the timelines with all of our subcontractors and design professionals as well. And we're integrating now construction management software so that we can share with our investors in real time anytime they want. They can come in, check on the status of the project, because we're keeping that updated in real time.
Yeah, and in terms of the sharing with the investors, just follow us on LinkedIn and you'll see all sorts of stuff. Marcelo's always doing selfie videos, walking through the properties and stuff.
Sure. But we'll also have, literally, I mean, nobody's done it yet, but you'll literally be able to go in and see the same project management software that we have, and you can check it out. Okay, so, and then again, I think we talked about architects, folks that we know who are in the zoning area. We literally, Andrew has a neighbor who's literally a lawyer, who's a zoning professional. So we know a lot of these people. The rules are locked in for now. I mean, when we go through the code and it's very, very clear, we see very clearly what is allowed in which area. And so we're not having to go through any kind of discretionary or anything like that. It's very much by the book, and we've repeated it. And now a lot of the people even that we talked to in the city, a lot of the reviewers are the same reviewers that have reviewed other similar projects of ours in the past. So it's really great to have that kind of relationship that goes back and forth. And we talked about the city of San Diego having now a pro-housing policy. Actually, although it's now changing because of the interest rate environment, we had come to actually meet and exceed permitting, the number of permits, more than in the last 20 years. So very pro-housing, and that's a real benefit.
Yeah, and we could talk, again, risk is a huge thing you have to be very concerned about. And I just sent, if you guys want to read more, I just in the chat put a blog that I wrote, it's just a Google Doc a few months ago about really going through and kind of doing a very numbers assessment of what the risk would look like given certain assumptions. If the cap rate changed, if the markets fell, if the timelines extend and stuff like that. So if you want to read a little bit more of the number stuff, it's there in the chat.
Yeah, and we also have a spreadsheet where you can go in and play with those numbers as well.
Mm-hmm. Oh, that's a good point. I'll get you a link to that too. So the exits here, do you want to do this one, Marcelo?
Sure. Basically, there's three ways to go. One is, at each phase. So, we purchase it. So we go through the entire phase, and as Andrew talked about before, with purchase, design, permitting, construction, lease up, and sale. That's typically our number one exit strategy. But you can also go through just the first part of the process. So do the rehab, get the units permitted, and then sell them to another builder who would decide to take it to the end. Because, of course, at each stage of that value chain, we're adding value to the project. Or, of course, as I'd mentioned in one of the projects, is to keep it, rent it out, refinance it, and cash flow it. So there's always three ways to go here for us.
Yep. And also, I just the Marcelo said I built a spreadsheet you can play with, and I dropped that in the chat as well, so you can grab a link to that. So what makes us different? Then there are other people doing ADUs here in San Diego, but what makes us different is that, or just doing regular builds, is that we're really experts at ADUs. Marcelo's construction experience is really key, and of course our team is fantastic. Build execution, as Marcelo has shown, tech driven. So we have that automated software that goes through and analyzes everything. Always kind of surprised at how 19th century real estate people are. I'm like, let's put some automated processes in place here, and all of a sudden the stuff cranks up from a once a week to 100 a week kind of process. And then co-investment, both Marcelo and I are both putting a lot of capital in. I'm putting in 50 to 100,000 on every project, and Marcelo's putting a big chunk in as well, and our friends and family are doing it too. I mean, my dad, my cousin, and just all sorts of different people that we're connected to. So it's not just, we're very integrated into this thing, right? So some people just kind of throw a bunch of projects out there and try to get other people's money and don't really have much relationship with them, and we're heavily involved financially, obviously time-wise, but very leveraged financially on these things too.
Yeah, and I would say on top of that, it's not just leveraged financially or involved financially, but involved emotionally and career-wise. So because Andrew and I both believe very much in affordable housing and the need here in our own market for affordable housing, but this is what we do every single day. So this is our job. This is how we pay our mortgage, so to speak. So we're fully invested.
Yep. And since we're just past the 30-minute mark, I'm just before we go into the pipeline, I'm just gonna drop this in case anybody has to go the 30-minute mark. I'm gonna drop that into the chat, and that's a place where you can go and do a soft commit if you guys are interested. Soft commit has no legal obligations. It's just to kind of say, okay, I'm interested in 50, 100, 200, whatever it is. Also, I should put in here that people have to be accredited, so they have to have a net worth of $1 million or more, or an income of 300,000 if you're married. There's a few other caveats in there too, but those are the big ones. And we're asking $50,000 minimum. And so yeah, as long as you have those two things in place, soft commit there. That's the link. And then just make sure I get that out before anyone has to jump off. But so here's examples of the stuff we're looking at right now. We have in our pipeline. This one on 41st Street. Purchase price is $700,000. It's actually, this is a do you know the deal on this one, Marcel? I think this is an illegal unit back here, and
no, it's not illegal. It's a legal unit. However, it's not economically viable. Let's put it that way. So we would actually remove that garage slash home, whatever that is, in the back, and that would become a place where we would build. As you can see, tons of room in the back, heavy rehab in the front, and then plenty of space for construction in the back.
Yep. So it looks something like this. Build this unit up like this. So the plan here, this is a larger renovation with us. So all these projects are very, very similar. However, this one, it's a little bit more of a renovation and a little bit less build than the things we're doing, because we're expecting to do 2 3-bedroom units and 2 1-bedroom units. That the cost to build is $1 million. Timeline is about 18 months. All these projects are about 18 months. Renovation and permitting, again, because that renovation's expensive, we're expecting higher $300,000 cost of renovation. That's both renovation, design, engineering, and the actual permitting fees from the city charges. And we think the after repair value is $2.9 million, which gives us an expected profit of $600,000 on that deal. $600,000 over 18 months would give us an annualized return of 25 to 40%, and that's annualized. So that'd be a total of whatever that is times 1.5, 40 to 60% over 18 months.
Over 18 months, yeah.
Okay, let me.
And these tend to be, as you can kind of maybe tell, some of these are in, how do I put it? Kind of more gentrifying transitional neighborhoods, like this one is, but it's in a really rapidly transforming neighborhood. So it's a really good candidate for us.
This one, another example. Again, all these things are very similar when you start looking at a lot of them. A little bit more expensive for the actual home itself, but it requires way less renovations. So you can see our renovation budget's lower, and the cost, and we have a little bit more room in the back there to build. And so we're looking at 2 3-bedrooms and 4 1-bedrooms, and the cost of that's about 1.2 to 1.4. So of course I put 1.4 to be conservative, and we expect about $700,000 profit on that one, which gives us that 24 to 35% return per year. Yeah. And then finally, this one, I like this one a lot. I think I'm most keen on this one right now, which is in Market Street, on Market Street, and it's a 6-plex already. So there's already this big building, and then I love big flat rectangles in the backyard. That's my favorite. That's the blank canvas that allows us to build all sorts of great things. So the purchase price is a little bit higher, 1.6 million. It's about twice the price of the other ones we looked at. And pretty easily could get a 2-bedroom 2 3 bedrooms and 4 1 bedrooms, but usually even go 3 stories on this one. So, but again, going with the more conservative estimate, this one would take a little bit longer because of the commercial build, the commercial building there, and a few other factors. But this one we expect our after repair value to be just north of 6 million, and this one we're expecting higher, 35-45% return annualized over, that would be for 2.5 3 years.
Good, yeah. Yeah, and all of these are city of San Diego, and they're all close to transit centers. That's part of the deal. They have to be close to transit center. That's how you get this affordable bonus density. And they're just, yeah, super, super well located, all of these.
And that's it. So trying to keep the information, again, and we went a little fast there, but I just want to make sure we respect everyone's time on this stuff. Again, like I said a few minutes ago, here's the link to do a soft commit. Again, no legal obligation when you do a soft commit. It's kind of, we just want to see what your kind of interest is in these projects, and we have a lot of these projects in the pipeline. And like I said, our goal is to buy 8 to 10 more properties in 2025. And I think we'll open it up to Q&A now.
Couple of quick questions because I have to run 11 minutes ago. But you had mentioned, I believe, that the maximum per project is per person is 10%. Is that correct? So any particular investor could come in with up to 10% of the project.
20%. So the banks, it depends on the lender, right? But most lenders require that a limited partner come in with 20%, less than 20%, and that's just one of their rules. But the thing though is that if we have 8 or 10 projects, yep, you could have somebody come in, and we've had this already.
But there are Flavio, there are other ways to work that as well. Oh, I'm sorry. I was just going to complete that answer. Is that part of it is that if you have more than 20%, then you're more significantly invested. So at that point, you might come in as like a co-sponsor or something like that, where you may have to co-sign the loan. So it's not that we simply cannot, it's just that things change above 20%. So we're always open to talking to people how to work that. But if you're just purely passive, you can't exceed the 20%.
Okay, and then the sort of a related question. Sorry, I'll quit right after these 2 questions so that anybody else can ask. But it is the investor invests in one particular project, or it's more on the fund that goes and spread it across different projects?
So the way this is set up is that you invest in one particular project. However, it's very simple to say, I'm going to put 50, 50, 50, 50, 50, or however you want to do it. But yeah, you're not just putting all of the money into a fund. But it's a very straightforward process to sign the disclosure documents that we have for each project.
This makes it a little bit cleaner too, because then people know what they're getting into, and there's a clear exit time too, right? This project might be 12 months, this one's 24 months, and makes it a little bit clean and easier for everyone if it's per project.
I had a question. I missed the first 10 minutes. I'm not sure if it was talked about, but so I'm assuming we're going to be limited partners, and will we receive like K1s on this? And would we be getting like are you guys like planning to do like cost segs on these deals and getting like 100% depreciation situation on year 1?
So
generally,
yeah, great question. So in these projects, because they're so short term,
yeah,
we will not be doing cost segregation. That is something we're looking at in the future for the buy, build, rent, and then keep. Because right now we're doing buy, build, rent, and then sell. So cost segregation. Now that is a good point. With the new administration, they're probably going to be re-upping the tax benefits for cost segregation and all of that. So 2 things. For one, that's a big plus for people who are going to buy these properties from us. That becomes much more of an incentive for the buyer. Which is great. We'll have a really strong buyer pool. But then also that would, if that does happen, become an incentive for us in the future, not today, but in the future to do more of the buy, build, and keep as well.
Gotcha. So we're not expecting to have any like passive income losses on our taxes if we're just gonna buy and sell.
You would in year one, but then
Yeah.
let's say it's 18 months, so you would in year
Yeah.
one, and then in year two, you'd recapture it.
Gotcha. So only on the ones that you're gonna possibly like refinance and hold is maybe where a cost seg would make more sense.
Correct.
Okay.
Yeah, the
Thank you.
cost seg, in this case, the cost seg is going to be from our buyers, people who buy from us will end up doing
Yes.
it. Yeah.
Okay. Thank you.
Yeah, it makes them on top of the in terms of the K1s, this platform that we're using, Avester, is a professional platform that does all the taxes and accounting stuff and does all the reporting, and we pay a lot of money so that it like does reports and files everyone's paperwork correctly.
Great. Awesome. Thank you.
Guys, this is Christian. Going back to like the ADU density bonuses, I'm very familiar with complete communities, and I understand they're in a little bit similar in a lot of ways not. But in this units, how is title held? Question number one, and two, are there any rent restrictions and specific rental pools that you gotta rent to?
So title is held. When you say how is title held,
I guess are you able to sell each unit individually ultimately?
Okay.
I guess that's what I'm trying to get to.
Not today. So the state of California has instituted rules that basically mandate that in the future cities will have to put together programs that would allow you to sell them, condoize them and sell them off.
Right.
But today, no. Today it's just one, contiguous parcel with all of the units. So it just becomes an apartment building. Yeah. So that answers question one. And the second question is, yes, there are a certain number of the units will end up having rent restricted to them. And we do that to 110%, what's called moderate. It gets kind of complicated, but moderate income.
I've seen that formula.
Okay, so you know it. Okay.
Yeah.
So maybe on a 7-unit building, 2 of them might be rent restricted for 15 years at moderate affordability.
So it's like the deed restriction that they put in there.
Yep, exactly.
Got it.
The nice thing is the deed restrict, the unless you're in the beach area, you're pretty good. I mean, the kind of rents that they allow you to charge are usually near or sometimes exceed market rent.
And I've seen that too. So sometimes it doesn't even make sense. And I guess one last question is, are you guys looking to also build in coastal areas? Obviously, dealing with coastal commission is a different thing. Have you done that, and are you trying to avoid it?
So and Andrew, jump in anytime. There are basically special rules within the city of San Diego that allow us to build in the coastal area. So we currently have one project right now that's 3.5 blocks from the beach, and we do not have to deal with the coastal commission.
Okay.
That's what's really cool about these is the city of San Diego got a dispensation for accessory dwelling units. And so there are restrictions, and we can get into that. But the bottom line is you can build the multiple units even in the coastal area.
Not significant.
Yeah, and I was trying to show that PDF, but it's a big, ugly, scary spread PDF that's hard to read.
I saw it.
Yeah, it's just the one in the lower right-hand corner.
Yeah,
that talks about.
The short of it is it's $2,600 a month rent restriction on usually 2 of 6 units, right? 1-bedroom apartment though in San Diego, $2,600 a month. Not a huge restriction. Like Marcelo said, if you're oceanfront with a view, yes, you can probably charge more than $2,600 for a 1-bedroom. But it's not a big restriction. And plus, those numbers also increase with inflation and rent and whatever, right? So I think the next year, or next year meaning this year, they released the numbers. I think like April 1st or something. It's likely going to be $2,800, and of course, a lot of these projects are going to be finished in 2026, and it'll be yet again another $2,900 whatever limit on it. But they are reported with the city, and that you have to follow those. And the application process is pretty simple. It's like $100 a year, and it's a pretty simple process.
Yeah.
I have a couple questions. Well, one of them was below market housing, which that you just covered. That doesn't sound like it's very much below market, not like San Francisco. But when these are being constructed, how are the utilities? Do they have their own water meters? Obviously, if you sell, it doesn't matter. But if you're going to hold, that's a big expense.
They're on a single water meter. You can sub-meter the water meters, and they do have their own. In fact, we're going forward now. Everything's going to be all electric, and they all have their own electric meter. So water is the one where, if you wanted to, you would sub-meter.
Okay. And you guys have a fairly aggressive, exciting plan of a lot of units. Have you considered, I'm sure you've considered absorption. I mean, do you think there's that much demand for that many units?
It appears that way. I mean, from everything we're reading, and in fact, one kind of positive but negative thing is that construction starts are off 60%. In fact, it's one of the things I think we'll introduce into our presentation as we go forward. But yeah, there's going to be a very extreme drop off in new construction for housing, in not just in San Diego, but nationwide. But specifically in San Diego, construction starts are now off 60%. And that's because of this tremendous run up in inflation and interest rates. It's as you can see, I mean, we're able to make the numbers work because of how we have this formula. But if you're a big time developer and you're building a 300 or 400 unit building or something like that, and you're having to pay, double-digit interest rates, it just doesn't work. We're able to make it work because of speed. Otherwise, this just wouldn't work. So having said that, that's kind of a long answer. Yeah, I think actually what's going to happen is, and what many market experts expect to happen, and they're already seeing it. And in fact, I've seen a graph where it's showing that San Diego is basically, we're just at about bottoming out. And so they expect rents to start to pick up again by the end of the year.
Mm-hmm.
Yeah, which is, like I said, it's bad and it's good. It's bad for renters. It's good for investors.
Oh, and one more question. The first person asked about whether you could invest in one or multiple. How many projects do you expect to have? Were all those examples projects that you are planning to be running? So 4, I think it was.
Are you talking about the examples at the end or during?
Yeah. Well, how many projects do you expect to have going at one time?
About half a dozen.
Okay.
And Marcelo, one thing we had announced in our email that we were pursuing one on J Street that we were in escrow on, and we ended up pivoting away. And Suri asked in the chat to us, replying in the chat here, that we were targeting the one on J Street, but we ended up having to pull out of that one because of our due diligence process. We wanted to make sure we have only like the best stuff that we're looking at. So I don't know if you want to talk about the pivot on that one, Marcelo.
Yeah, no, it was basically just looking at, when we went in and did our inspection, we found out that it was too much work and it would be too costly for the kind of returns that we are looking for. So unfortunately, I had to pull out of that one. But I guess it's both, again, something that's, good and bad. So, you don't want to go several weeks down the line and then say, it's a lot of effort, but for not. But it's certainly better than going 18 months down the line and doing the same thing. So it shows that our due diligence process is working. I think bottom line, right? So there's so many opportunities. We didn't talk a lot about it, but we do also direct to owners. We talk directly to sellers as well as the stuff that's on the market. So there's just a lot that we're working on, and there's, frankly, what's really great is there's more opportunities than we can tackle. So we passed on that one.
Yeah.
But there'll be another one.
Yeah, that one I was looking at the added cost we'd have to do to kind of the extra cost that we found out during inspection, what we'd have to do, and the returns kind of fell down to like expected 10, 15, 18% annualized return, which of course, like if you compare that to the stock market, that's nice. But I'm like, but we have so many things that are more like 25, 20, 25, 30% return that we might as well not waste our energy on that one and just focus on the better opportunities.
Yeah.
Guys, I had another question on the lease up and kind of just who the target market is for leasing units. Because I guess when I think about it, there's probably no amenities in these units. There's definitely no parking. So how are you coming under market in rent slightly to attract those pool of renters slightly? And if so, can you talk a little bit about those? Because obviously, comparing that to an apartment I could get in North Park, let's say, and you're a couple blocks down, but I get the amenities. I may get some parking, even though none of them are offering it anymore. There may be some other amenities, I guess, than just simply getting my apartment and that's it, right? So what's the strategy there?
Yeah.
Well, one thing I can say, I cheated a little bit, and I make Facebook posts and post what these properties would look like in the neighborhoods that we're renting them. So I kind of have like the cheat is I have a fake Facebook post to see who would reply to them to kind of make sure we have the right kind of renter we'd want to rent to. And I can show you, this is sort of, these are just my notes. Hopefully they're not, there's nothing too whatever in here, but these are, I posted, this is for when the one we had the video of, right? So inside of 36 hours, we had 28 people apply on Facebook, which is really good. We always want to see about 20 apply in the first few days. That's kind of how we look at the stuff. And you can see that a lot of these people are, person who works at Sigma Healthcare, person in their mid-late 20s, people in their 20s and 30s, and active duty military people who work for Nike, software engineer at Nike, stuff like that. I know these are kind of my rough notes. Maybe I shouldn't share these. That's kind of what I see, but I don't add anything else on top of that, Marcelo.
Yeah, I would just say, yeah, this is affordable housing. So actually, some of our properties do have some parking. They don't all have parking for all units, but we do offer, we really strive to offer some off-street parking, and they are under market. So they are not for the same, like Crawford, for example. We compared the rents. There is a brand new apartment building that's nearby, and we specifically, when we underwrote it, we underpriced the rents compared, even though tons of off-street parking in that particular project, tons and tons of off-street parking, but we did put it at lower rents. So for sure, people are going to be attracted to it because they're going to be less for rent.
What about that single family unit? Obviously, can you explain to me how the backyard is divided with the other units? Is there still a small backyard for that single family unit? I'm sure that is there maybe a common area space? How is that split?
Yeah, we provide common area, and we even have on them we have like a sliding patio doors so that people have like a little patio area. It kind of depends on the layout of the lot. So the tighter lots don't have as much. Other lots have a little bit more space to be able to provide a little bit more either common area or private space. Like on the one design we're doing an OB, we're expanding the deck, the upper floor, so that it has a little bit more of an actual landing area at the stairs, so that they have a small patio. So, we strive to provide, again, it's affordable housing, so it's not luxury, right? So we do want to be able to provide as much as possible, some nice common areas, some nice little individual spaces for people, but it's affordable. So we balance that out. But for sure, it's a consideration.
Is the single family home sharing space with the ADUs, or do they have their own separate space?
They have a little separate space of their own. Yeah.
I have two more questions. I know, zoning, you can build what you can build, but do you consider whether the house next door is owned or rented, and just what type of neighbor they're going to be, whether they're going to, again, I know they can only do so much, but whether how they will feel about a project in their backyard. And then my second one is that Market Street property, the apartment building is leased, it looks like. So what do you do with that? Just the tenants, you just let them know that there's going to be some construction and.
Yes. So let me answer the first question. So we try and be very sensitive. There are setbacks that we are required to have, and so we make sure we maintain those setbacks. We could go higher. I mean, technically, we could go 3 stories. We don't, because we don't want to be the ugly neighbor. Obviously, I mean, a lot of people, if it's owned, there might be people who aren't particularly thrilled with having additional units next to them. I don't have a totally good answer for that, because
it's
we're
tough.
addressing a need, right? So
Yeah, it's tough. I mean, Karen,
I have to admit, if it's in a single family zone, it's a little tough.
Mm-hmm.
I mean, being in San Francisco, like there's challenges to building and current residents and stuff like that, and of course the cost. So the big thing is that there's been really no building in San Diego for a long time because of NIMBYs, right? Not my backyard. But now there's these organizations that call themselves YIMBYs. Yes, in my backyard.
Yeah.
And so I mean, there are some neighbors that aren't going to be excited about it, but the thing is that those neighbors are usually, millionaires that bought houses 30 years ago, right? 20 years ago, and this is affordable housing. So yeah, there's some pushback from neighbors. Yeah, that's not gonna sugarcoat it, right? But the thing is that the city kind of knows that there's gonna be pushback, and they do all this by right as opposed to having public comments on it, which I know that's why I'm like, I don't know how long this is gonna last. I feel like the mayor might kind of get might be more people protesting the mayor the next election cycle. So I'm like, right now we had the political will to do it, so let's go. I don't know what it's going to look like 2 or 4 or 6 years from now, right?
Right. Well, there is a demand, so it's, I guess, the lesser of 2 evils. I was just curious, how that. And then
and you have, this gets into other areas, but we have a huge homeless problem, right? And homelessness, despite lots of people have opinions, but there's a lot of research that homelessness is directly tied to the cost of housing in a particular area. So you want to solve homelessness, this is one of the ways you do it. And unfortunately, like I know specifically city of LA, city of San Diego, roughly 60% of the area is zoned for 70% zoned for residential is zoned single family zoning, which is extremely exclusionary, So it's like, holy cow, what are we going to do? Everywhere you're supposed to live, it's all single family zoning.
And most of the stuff we're buying is actually zoned multifamily. It just happens to be there's just one house there, right? So it is actually already zoned as multifamily.
Yeah, probably 4 out of 5 are zoned multifamily.
Yep. And then back to the Market Street that's occupied.
Yes, yeah. So over time, I mean, we would read those units, I'm sure are, and those were examples of things that we're looking at. So I can't answer to the specifics of Market Street, but we would look at the condition of the property and its safety and whatnot. So it may be that we'd have to work through and over time get those existing tenants out in order to be able to upgrade and bring that property back up to code.
Okay.
Yeah, and on top of that, a lot of these things they're the beginning of the pipeline, right? So we still have to figure out, there's some other things to analyze before we're ready to actually commit and raise capital for that deal in particular.
Wow, 3.3 cap rate? My goodness. Sorry.
Which property is that?
I'm looking at the market. They have a little
LoopNet.
Yeah, LoopNet offering memorandum. So I was looking at that.
Yeah,
Cap
so
rates.
obviously the rents are way under market, right?
Way under market. Yeah, way
market's
way
under market.
Yeah, and even well, that's what I don't know, but from what you said, yes, I was curious. I wasn't going to launch into it, but yes, I was curious because they're one bedroom. They say 1,500, so for market, but at another time. Well, thank you. I need to step away, and I think I don't know. Am I the only one left? No.
No, there's a few other people.
Yeah, awesome, Carol. Thanks for joining. I think we'll wrap it up there. But Suri, I know you were chatting a little bit here in the DMs, but I can call you later if you have some time to chat today or this week.
Thank you. Thanks.
Yep. And Karen, thanks for coming. And
Thank
I'd
you.
love, if you don't mind, I think I sent you a Loom video of the underwriting, but I'd love for you to tear it apart if you want to give me some advice on it.
Yeah, I'd love to look at it more. I don't know San Diego market, but I'd love to launch into it a little bit.
Sure.
Thank you. They're very interesting.
Awesome. Thank you, guys.
Bye-bye.